If you're behind on your mortgage payment right now, or you can see it coming, I know you're tempted to skip this video. The numbers I'm about to walk you through aren't going to pay your bills. It's your situation. I get that. But you need to hear this. What's happening in the broader market area right now is going to affect you significantly. And it's leverage you can use to get yourself out from underneath it. The earlier you understand what's happening, the more options stay on the table for you. There's a pattern in the data right now I'm calling the Crisis Trifecta. I'll walk you through it for the next few moments. And at the end of this video, I'll tell you exactly how this changes the timing on your situation and hopefully helps you with your situation. There are 3 signals flashing red right now. Each one tells you something. Together, they're going to tell you something completely different than what you expect. First, we're going to talk about credit card delinquencies. The second thing we're going to talk about is mortgage foreclosure filings. And the third thing are vehicle repossessions. The big factor is all 3 are happening at the same time now. And the fact that they're all happening at the same time is the part that really matters. If you're an agent watching this, well, this is the macro setup behind every distressed listing call you're going to take over the next 90 days. So stay with me also, so that we can help out everyone that we can. Here's what people used to do when money got tight. The Federal Reserve has tracked this for decades. The first thing to slip are credit card payments. Credit cards are flexible. You can pay the minimum, defer a month, maybe take a penalty with that, but the card company isn't going to take your home away if you skip one. The second thing to slip is the mortgage. The mortgage company doesn't move fast. They give you grace. They send letters. They try to work it out before they file a foreclosure. So even though your house is probably the most valuable thing you own, it's not the thing that people hold on to the tightest. What people fight the hardest for? Their car. The car gets you to work, and the work is what pays for everything else. People fight to keep their car in the driveway. That was a pattern for decades. Well, here's what's different right now. The old pattern we'd see where credit card delinquency spiked first, then later mortgage defaults would climb, and then later the vehicle repossessions would come. 3 waves, one after another, in sequence. That's not what we're seeing right now. What we're seeing is a little different. The credit card spike is already here. We've been watching it for a while now. But the mortgage default spike and the vehicle repossession spike, they're hitting at the same time, not in sequence, but together. When the thing people used to fight hardest to hold on to starts getting taken away at the same time as their house, well, that tells you something's changed. It's hitting hard, it's hitting fast. That's what I'm referring to when I talk about the trifecta crisis. Cards, mortgages, and cars, all flashing red all at once. That's the change. So the first signal are the credit cards. U.S. consumer delinquency rates jumped to the highest level since 2017. That's straight from the Federal Reserve Bank of New York's most recent quarterly debt report. And borrowers with the weakest credit, that's the ones the industry calls subprime, they're getting hit the hardest. These are the people closest to the edge financially. When their numbers move, it tells you that the rest of the system is starting to feel it too. Credit cards are the leading signal because card companies have flexibility. You can pay the minimum, you can defer. They're not going to take away anything physical if you skip a payment. So credit cards are the first thing people stop paying when money starts to run out. When that number moves up like it just did, it tells you the financial pressure is real and it's spreading. Quick pause here. Before I get into the next signal, if any of what I'm walking you through is making you think about your own situation, I have a free distressed property options checklist. It's what you should gather before you talk to anyone, your lender, an attorney, or an agent. There's a link to it in the description below. If you can't find the link, just email me at jimarmstrong904@gmail.com and I'll send it to you directly. One more thing on that. You'll notice I'm not asking you to comment, I need help, or anything in the video down below. The reason is real simple. You don't need to air this stuff out in public. Email or DM me. Whatever's going on for you is your business, not the comment section's business. Signal 2 is mortgages. The most recent data from ATTOM, the leading source on foreclosure data in the country, shows that the first 3 months of 2026, there were over 118,000 properties that had foreclosure filings. That's up 26% for the same period a year ago. And looking at March alone, almost 46,000 properties. That's up 28% year over year. The trend is speeding up. Foreclosure starts, actual beginning of the foreclosure process, were up 20% year over year in the first quarter. And here's one that really tells what's happening. Bank repossessions are up 45% year over year. banks are taking back homes 45% quicker than they were a year ago. That's not a small move. That's a big number. And Florida specifically, and this mattered numbers because Florida's been a leading edge state in the entire pattern. Florida ranked third in the country for foreclosure rate in the first quarter. 1 out of every 750 housing units in Florida had a foreclosure filing, behind only Indiana and South Carolina. And Florida had over 10,000 foreclosure starts in the first quarter, second only to Texas in the entire country. A few more numbers worth knowing. About 1 million homeowners are now underwater on their mortgage, meaning they owe more than the home is worth. That's a 3-year high as reported by BSCN and MarketWatch back in February. FHA and VA loan foreclosure starts are up 23% year over year. Also as reported by BSCN and MarketWatch. These are loans for first-time home buyers, veterans, and lower down payment borrowers, the most vulnerable part of the market. The Wall Street Journal has reported that the government is tightening federal mortgage subsidy rules, and it is one of the major things that are contributing to the foreclosure increase. And Mark Zandi at Moody's has flagged FHA delinquency as a recession leading indicator. Quick clarification, because most people don't know this. When you hear foreclosure filing, that's not the auction. That's the start of the process. The lender is filing the paperwork to begin. The actual sale of the home is months later. So when we say filings are up 26%, that's 26% more homes entering the process, not 26% more homes being sold at auction. The auction wave hits later. We're in the middle of this signal right now, not approaching it. Signal 3 are cars. 2 numbers tell the story here. Number 1, what actually happened. In 2025, about 3 million cars were repossessed in the United States. That's the highest level since the Great Recession back in 2008 to 2009. To put it in plain terms, in 2024, we had 1.73 million cars taken back. 2025 jumped to 3 million. That's about a 73% increase in a single year. A 73% jump in cars getting repossessed. Number 2, what's happening this year? When a lender wants a car taken back, they give an order called a repossession assignment. That goes to a recovery agency. In 2025, there were 7.5 million of those orders. The industry forecast for 2026 is 10.5 million. It's about a 40% increase over last year. That's the order to go pick up a car. Not all of them will result in a successful pickup, but the number tells you how much demand there is for lenders to take the cars back. The Federal Reserve also confirms what's behind those numbers. As of the end of 2025, 5.2% of auto loans in the country were at least 90 days behind on their payments. That's the highest level it's been since 2010. That's back when we are all still climbing out of the housing crash. Why does this signal matter more than people realize? Trouble happens on a credit report that nobody sees, and mortgage trouble happens behind closed doors. Vehicle repossession, well, that's a signal you can actually see in your own neighborhood. Your neighbor's car gets towed away and you notice. That's why the number breaks through when others don't. If you're an agent watching this, my email is in the description below, jimarmstrong904@gmail.com. And if you've got a distressed file and you're not sure how to handle it, or a seller call you don't know how to take, reach out. I'm building my business on my SFR certification, and I'd rather take the right file very carefully than just chase volume. This helps me serve everyone better, including any homeowner that you have or you need to refer. And if you're a homeowner watching this, stay with me for the next few moments. This is the part that I told you up front that matters to your situation specifically. We're getting there. If you're behind on your mortgage or you can see it coming, I know everything I just walked you through feels like background noise. National foreclosure data, vehicle repossessions, credit card delinquencies, that's not your daily life. Your daily life is your mortgage payment that's coming up and the question of what you're going to do about it. The statistics don't help you sleep at night. I understand that. I get it. But stay with me, because this is the part where the statistics actually start to matter to you specifically. If your plan or strategy is selling, whether that's a traditional sale or through a short sale, you're selling into this market, not the market from a year ago, not the market that your neighbor sold into 3 years ago. This one right here. The data shows the market is shifting against example from Realtors.com April 2026 report. Inventory is up 4.6% year over year. That's more competition than you had a year ago. Median list prices have fallen for 6 straight months year over year. Buyers know they have leverage now. Days on market are climbing. Buyers are slower. They're comparing more. Mortgage rates are at 6.37% as of May 7th, and that's from Freddie Mac. That's below where they were a year ago. Today's buyer pool is more qualified than last year's. Now layer the trifecta crisis on top, more distressed homeowners are getting forced to sell. More market-aware sellers listing before things get worse. The inventory wave compounds over the next 6 to 12 months. Past short sale cycles show the pattern that when lender backlogs close down and approvals get more selective. That's well documented from the 2008 to 2012 wave. Buyers are still active right now. The mortgage rate is below where it was a year ago. Your home is still compared against a smaller pool of competitive inventory, more so than it will be at the end of the summer. Your sale closes against today's buyer pool, today's competition, today's lender willingness, not last year's, not next year's, today's. I'm not saying this to push you. I'm saying this because it's what the data reads. The leverage you have today is real. The leverage you'll have at the end of the summer, maybe not so much. That's the part of the video that's for you. I can't do anything about your credit cards, and I can't do anything about your vehicle. But your house, your home, I get it. The wolf's at the doorstep. But guess what? The wolf's scared of me. And I can help you discover your options to avoid foreclosure. If you're behind on your mortgage, or you can reach me 2 ways. 1, email me directly at jimarmstrong904@gmail.com. That's Jim Armstrong, the number 904@gmail.com. It's a confidential conversation. No pressure. We'll talk through your options. Actually are. 2, there's a cal.com link in the description below. You can book a private call slot whenever works for you. Same conversation, just on your schedule. Either way, like I said earlier, you don't have to air this out in public. The comment section isn't where the conversation belongs. Email or cal.com, the link's below. Your business stays your business. If you're an agent watching this, same email. Send me a file you're not sure how to handle. I'd rather take the right file carefully than chase volume. That serves you and your client better. And if you didn't grab the distressed property options checklist earlier, links in the description or email, and I'll send it to you directly. I'm Jim Armstrong with Momentum Realty. I'm an SFR certified, that's short sales and foreclosure resource. Quick disclosure on the financial side. I'm not your attorney and I'm not your CPA. Anything I've talked to you about that has to do with debt forgiveness or tax implications, you should run by a qualified professional before you act on it. If you don't have one, I can help you locate one. That's part of what I do. If you found this video valuable, subscribe so you can stay in touch with my content. And more importantly, if you're distressed, if any of this is hitting close to home for you, contact me, reach out. That's what matters.